Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pardomanik, all the way from Philadelphia. How are you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, contact your RIA or your broker. That's what they're there for, to give you guidance, provide you with advice. There's the disclaimer.
Excellent.
Yep. Share my screen. Before we get started, we do want to mention we're having a webinar today at 2 o'clock. Interactive Brokers is hosting that webinar, so you do have to register with them. It will not be published on YouTube. It's going to be on an Interactive Broker platform. It is free, but you got to register to get invited in. And what we're going to discuss is option volume profile. And we're going to take a look at an example of a stock. We're going to look at today's option volume. So at 2 o'clock, we'll start it. We'll look at, we'll pick a stock and go deeper into the option volume to get more insights, what's going on in the stock and in options markets in that stock. So that's going to be 2 o'clock today.
And I dropped that link into the chat.
Okay, thanks. And if you're joining us for the first time, we do these morning shows really to answer any questions you may have about Market Chameleon tools, data analytics, strategies. If you're seeing something unusual there you'd like to bring up to the community, you're welcome to do that. You could put your question on the live chat on YouTube. Will's watching it. He'll read it back to me. If you want to come on a show and ask your question live, we provide a link to Zoom. If you click on that link, it takes you over to Zoom. Once you're inside Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, everybody could hear you, could ask your question live and direct. While we're waiting for questions to come in, what we'll do is take a look at the pre-market report, see what's trading in the pre-market hours. If questions don't come in, what I'll do is take a look at one of our reports to get some insights on the markets. And if we don't have any questions, we'll see how it goes. Maybe we'll cut off a little bit earlier today because I do have something that I have to attend after the show, and we are doing that webinar at 2 o'clock as well. So let's get started, but stop me if we do get questions. Okay, Will?
Perfect.
All right. Pre-market report. These are stocks trading in pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. Down here, I see 40 stocks made our percentage gainers list, 64 in the decliners. From this perspective, we're looking like a more bearish bias at the open. Let's filter out this list to only S&P 500 companies, because when we look at the pre-market report, it's looking at all these different securities that trade on the major exchanges. So it will include low cap stocks, closed-end funds, leverage products, ETFs, units, and we want to narrow that list down to S&P 500 companies to get a sense of where the market is maybe opening up. And to do that, we're going to use the filter here in ETF. When I drop it down, we get a list of different ETFs. When you select one of these ETFs, the list below the report will get filtered by stocks that are holdings in that ETF. And let's do SPY here. That's the S&P 500 ETF. Click on that, and we see now the list below got filtered by stocks that are in the SPY ETF, which are the S&P 500 constituents. And here we see one stock made our percentage gainers list. 17 on the decliners. So from this perspective, looks like a weaker opening in the morning. We did have a pretty decent rally kind of on Friday, continued yesterday in the morning. Then we had some Fed speakers come out very hawkish, saying that, interest rates still look like we're going to 5%. And the indication is that they're going to be holding them there for a long time. I think that was a quote. He said, a long time. One of the Fed members did say that yesterday. Market turned around, kind of sold off, topped off at that rally. And now some people even think we might have to go. I think, what was it, Jamie Dimon? Did he say there's a 50% chance we might have to go even to 6% to battle this inflation? Because the inflation right now just seems like it's persistent, right? It's kind of entrenched in the economy. It's not going away that easily, even with interest rates right now, what they consider restrictive territory. Well, you were watching Jamie Dimon, right?
Yeah. When I was watching him, I didn't see his comment on interest rates, but it does seem. I mean, listen, we're in a new paradigm, right? This hasn't happened, in a very long time. Fighting inflation, right? And so it's a big unknown, and I'm amazed that the market is so intent on the fact that they feel, or when I say they, a lot of participants in the market feel that interest rates are going to come back to lower rates anytime soon. Just doesn't seem feasible to me. And if he did say that, I would agree with Jamie Dimon that. I mean, we talk about it all the time, right? What in your life seems like it's dropping in price? I just went to buy eggs the other day. It was like $5 for a carton. That's like twice what it was 2 years ago.
Right. They're food inflation, and that's impacting almost everybody around the world, right? It's not like a local issue. We're seeing that around the globe. That's going to be a problem, right? That's real inflation hitting everybody, and especially some of these countries with lower income, they really feel it. One of the things sparked the rally, I think, China. Here, let's take a look here. So this is the ETF, Chinese ETF, the big. Let's take a look here. So these are China's large cap ETFs. But just to show you guys what's been happening recently, this is the FXI. You can see in the last 3 months, the FXI is up 20%. So you're talking about almost like, that's like a bull market already in China. So that, I think, had some spillover effect into the U.S. equities market. We started feeling that, but again, the Fed, don't fight the Fed. They're saying they still see issues that warrant higher interest rates. So interest rates are, the indication is we're going higher. Whatever it is today, it looks like we're going higher. And when we go higher, they're going to hold it there for a while. And the 10-year Treasury isn't really reflecting that almost, right? They're not reflecting that we're going much higher and we're going to stay there for a while. So right now, it's a little bit.
No, it's almost like the market participants are fighting the Fed.
It's almost like, we're seeing the markets fighting the Fed, and that's what it feels like right now. We'll see, what do we have? The CPI coming out soon. I think we're having that, and then the Fed meeting. So we'll see what happens. But all the indications, and they're looking at numbers all the time. So far, they've indicated that we're going higher, and we're going to stay there for a while. And I think one of the Fed member said that they don't see any rate cuts in 2024. So we're going higher this year, and no rate cuts all the way. So we're talking about 2 years, right? Next 2 years, higher interest rates in restrictive territory. That's one of the indications. And I think once that came out, that's when the market kind of turned yesterday. So you can see here, kind of turned. We're up
the next
in the morning.
CPI number is January 12th for anyone who's interested.
So exactly. So it's coming out. It's coming out soon. And then the market started heading back down. So, all these rallies so far, the Fed has come out trying to tame people's expectations, especially if the markets are rallying in anticipation that there's going to be some kind of a rate cut and easy money. Let's see if there are no questions. Well, maybe
we did have a question relative to the pre-market. It was from 40 Drover, our friend from Canada. He was asking, can you link the pre-market, say down or negative as this morning, with a down day on the market using the data? I'm wondering, I'm assuming what he's asking is if it's down in the pre-market, do we have any data to show where it tends to close at the end of the day, or where it is closed historically on moves, or if it's a bigger move? Is there anywhere in the pre-market you can do that?
Yeah, so there are stocks that are up and down, right? So you could look at individual stocks to see like what tends to happen, right? To these stocks, even as a group. So what we can do is come down here, and this report here is looking at stocks that are either have gapped up in the morning or gapped down, right? So the pre-market, what's happening in the pre-market is there's trading in the pre-market hours, and usually the heading into the open, the pre-market trades, or the pre-market trading comes close to where the stocks tend to open. Not exactly, but if we're seeing stocks in the pre-market that are lower, then the opening price will be close to where it's trading, around 9:30. If it's higher, that's where the opening usually happens, higher to where it's trading. So the pre-market's kind of giving us an early look where the stocks might open for official trading. This here shows the gap up and down at the open, right? And then what happens the rest of the day? Is there follow through, or is there a reversal? What tended to happen? And it keeps track of the last 20 trading days. So it's rolling, right? What's the most recent data telling us? That's how it's tracking. So it's not tracking. So it's looking at it, what was happening a year ago or 2 years ago or 5 years ago is not as relevant as what's happening in the market today. How are people feeling right now? And what are the participants doing today? And when we look at the last 20 days, right, for example, the gap up, well, let's look at the gap down. So let's say today there are going to be stocks that open lower, right? So since we're indicating, more negative, let's see what would happen. What happened in the last 20 days for stocks that opened lower. And as a group, if we look at all the stocks here, they're listed below. This is the summary statistics. There's 4,530 observations, and we track the first half hour and then to the close. So when the stock, let's say, opens down, it'll be down 1%, 5%. After the opening, we use that opening price benchmark. Okay, so you can't get yesterday's price anymore. But let's say at the open, it's down. What do you do from that point, right? And according to the last 20 days, this is what tended to happen. That in the first half hour, 46% of the stocks from their opening price were higher. So by 10 a.m. they were higher. 53% of them were lower. On average, lost 0.1%. Okay. If you all the way to the close, so if we tracked it from the opening price, so it opened lower, what happened from the opening price the rest of the day? 47% of them went higher, 50% lower. On average, it was kind of a break even. So still tended to be lower, right? The 53% tended to be lower first half hour. By the end of the day, 52% were lower. So tended to still weaken over, on average, over 20-day look back period. Now, if we want to filter that down, let's say to only S&P 500 companies. So I'm going to use this filter and say, show me S&P 500 companies. So over here below, you can see this is from yesterday, January 9th. These are the list of companies. You can see here, the first one opened at 173.87. That was down 1.2%. By 10 a.m., you can see that rallied 3.3%. That was yesterday. But by the close, it was 177.64. So still up from the opening price, but not as much as the first half hour. But that's one stock. What about, the group of stocks? What did they tend to do and over an extended period of 20 days? So by 10 a.m., 59% of them were lower. 41% were higher, 59% were lower, for an average loss of 0.2%. So this is looking at only the S&P 500 companies. This is looking up here at all stocks, all securities. This filtered one is looking right now at only S&P 500 companies. Okay. What about by the end of the day? Well, by the end of the day, 56% of them were lower, but on average lost 0.3%. And kind of to answer this question, when stocks were gapped lower, when they opened lower from the previous day in the S&P 500, so here in this S&P 500 stocks, did that on average, was that a buy opportunity at a discount, buying the dip, or was that or did they tend to weaken? Was it really buy opportunity, or if you waited till the end of the day, on average, did you get a better deal? Right? That if we're trying to answer that question, so we see here statistically, you were better off waiting till the end of the day, because more often than not, those stocks continued lower. And on average, what does that mean on average? If you invested exactly the same notional in each stock, let's say $1,000 worth of stock, not shares, but $1,000 worth of stock in each one of them, you could see on average, you lost 0.25% per stock. All right. So it wouldn't have worked out buying the dip at the open, day after day after day. That doesn't mean that they all did that. Obviously, here's one up top. This one did pretty well buying the dip. Here's one that did pretty well by 10 a.m. But statistically speaking, if you're just doing all of them like that, you could see that on average, they weakened. They tended to weaken into the first half hour and into the close. Hopefully that was, And of course, you could keep narrowing it down. Let's take a look at maybe the higher market cap stocks, S&P 500, over 100 billion. So what we'll see is maybe not every S&P 500 stock was a buy at the dip, but what about like the really large market cap stocks in the S&P 500, right? That's where people tend to, hold more stocks, try to find better deals in the high cap ones. So I'm going to use the 100 billion. So now we have stocks that are over 100 billion, like Tesla, Lockheed Martin, Pfizer, Qualcomm. Was that an opportunity to buy at the morning, right? Like Tesla, was that an opportunity to buy at the morning, or do you wait to the end of the day? Do you wait till the first half hour? So you can see here, the larger market cap stocks, they did even worse. They continued, more often than not, they continued lower. Let's do sector. What is a good sector right now? Let's do energy sector. What about that? So the energy sector, which is still benefiting from, higher inflation, higher oil prices, that looks like a different picture, right? That was a buying opportunity on the dip. See, 73% of them on the dip were an opportunity, right? 73% of them were higher for an average gain of 0.4%. Here, by the end of the day, 64% of them did climb, but on average did lose 0.1%, meaning that by the end of the day, some of them were lower by a greater amount than the ones that were higher, dragging down the averages. But energy was, and it just popped into my head because I know that, energy is the stronger sector out of the S&P 500. Healthcare. Let's take a look at healthcare. Healthcare stocks. Here we go. So healthcare stocks, nope. Still lower, right? So once the selling started, kind of tended to continue after the opening. So these are kind of questions we could answer with this report. And, the data is down here below.
Awesome job, Dima.
All right. So guys, if there are no more questions, we're doing the webinar today at 2:00. That's going to be on option volume profile. But if there are no questions, I'm going to end it a little bit earlier because I do have an appointment to run to after this.
Yeah, no, that's fine. Also, just so you know, even if you can't make the webinar live, just by registering, they'll let you know where you can go and watch it. And there are a lot of, I'm sorry, we just got a question from Area. Is it on the IB site? Yes, it is. The link to it is also on the Interactive Broker site. If you just type into Google IBKR webinars, it will come up. And there's also a library of all the previous webinars. I think I counted them the other day. We've done almost 17, right? 17 webinars. Wow. Maybe this is 17. It's a lot of webinars.
Yeah, we've been doing it over a year with Interactive Brokers.
Yeah, good stuff. All right, great job, Dima. Thank you so much.
Yep. All right. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you either later today or tomorrow.
All right, trade in peace, chameleons. Thanks, D. Bye.